History doesn't repeat itself, but it rhymes. In the late 1990s, the world became obsessed with a new technology. Investors believed they were witnessing the beginning of something that would change human civilization forever. The internet promised to revolutionize communication, commerce, media, and business. It was faster, it was global, and it was inevitable. Companies with nothing more than an idea could raise millions of dollars overnight. Businesses added "com" to their names and watched their stock prices double or triple within weeks. Investors weren't analyzing profits. They weren't analyzing cash flow. They were investing in belief. Belief in the future. Belief in transformation. Belief that this time was different. And in many ways, it was different. The internet did change everything. But the market didn't care. Because in March of 2000, the bubble burst. The Nasdaq fell nearly 80% over the next 2 years. Trillions of dollars in market value vanished. Thousands of companies disappeared. Even companies that would later dominate the world saw their stock prices collapse. Amazon lost more than 90% of its value. Cisco, once the most valuable company on Earth, lost hundreds of billions in market capitalization. The technology survived, but the hype did not. Today, more than 2 decades later, we are watching a new technological revolution unfold. And once again, investors are convinced this changes everything. This time, the technology is artificial intelligence. Artificial intelligence has moved from science fiction to economic reality faster than almost anyone expected. In just a few years, AI systems went from experimental tools to global platforms used by hundreds of millions of people. ChatGPT reached 100 million users in just 2 months, making it one of the fastest-growing consumer applications in history. Companies across every industry are integrating AI into their products, their services, and their long-term strategies. And investors are responding accordingly. Stock prices of AI-related companies have surged dramatically. NVIDIA, once known primarily for gaming graphics cards, became one of the most valuable companies in the world. Microsoft reached historic valuation levels after integrating AI into its core products. Meta, Amazon, and Google began spending tens of billions of dollars per year on AI infrastructure. Entire industries are being reorganized around artificial intelligence. Governments are calling it the most important technology of the century. CEOs are calling it the future of everything. Investors are calling it the greatest opportunity of our lifetime. And they may be right. But there is something else happening beneath the surface. Something quieter, something less visible, and something far more dangerous. Because while artificial intelligence is real, the expectations surrounding it may be even bigger than the technology itself. And when expectations grow faster than reality, financial bubbles begin to form. To understand why, we need to understand what's really happening behind the scenes. Because this isn't just a technological revolution. It's an arms race. Right now, the world's most powerful companies are locked in a competition unlike anything we've seen before. Microsoft, Google, Amazon, Meta, Apple, and NVIDIA. These companies are not just building software. They are building infrastructure on a scale that rivals national governments. And they are spending money at historic levels to do it. In artificial intelligence, power comes from scale. The more computing power you have, the more advanced your models can become. The more advanced your models become, the more users you attract. The more users you attract, the more data you collect. And the more data you collect, the better your models become. This creates a feedback loop. A loop that rewards size. A loop that rewards speed. And a loop that punishes companies that fall behind. This is why the AI race has become so aggressive. Because in technology, second place is often irrelevant. We've seen this pattern before. Google dominates search. Microsoft dominated operating systems. Amazon dominates cloud infrastructure. Meta dominates social media platforms. Technology markets tend to concentrate power in the hands of a few winners. And artificial intelligence may follow the same pattern, which is why companies are spending enormous amounts of money before knowing who will actually win. At the center of this arms race is a company that few people expected to become one of the most powerful companies in the world: NVIDIA. For years, NVIDIA was known primarily as a gaming company. Its graphics cards powered video games, allowing players to experience more realistic visuals. But over time, researchers discovered that these same graphics cards were extremely effective at training artificial intelligence models. Because graphics cards, or GPUs, are designed to perform many calculations at the same time. And modern AI training requires exactly that kind of parallel computation. This discovery transformed NVIDIA from a gaming company into the foundation of the AI economy. Today, NVIDIA's chips power most of the world's advanced AI systems. Companies like Microsoft, Google, Amazon, and Meta rely on NVIDIA hardware to train and run their models. And demand has exploded. NVIDIA's most advanced chip, known as the H100, costs tens of thousands of dollars per unit. Training a large AI model can require tens of thousands of these chips operating continuously for weeks or months. This means a single training run can cost hundreds of millions of dollars. And companies don't train models just once. They train them repeatedly. They improve them. They expand them. They compete with each other. This has created unprecedented demand for computing hardware. In 2023 and 2024, NVIDIA's revenue grew at one of the fastest rates in corporate history. Its data center business became its largest source of revenue, driven almost entirely by artificial intelligence demand. Its market capitalization surpassed $2 trillion, placing it among the most valuable companies ever created. But NVIDIA is just one piece of a much larger system. Because behind every AI model, there is infrastructure. Physical infrastructure, data centers, power systems, cooling systems, networking equipment, and land. Lots of land. Modern AI data centers are enormous facilities filled with thousands of machines. These machines consume massive amounts of electricity and generate enormous amounts of heat. Keeping them operational requires complex engineering, advanced cooling systems, and constant maintenance. And building these facilities is incredibly expensive. Microsoft has invested tens of billions of dollars into expanding its global data center footprint. Amazon continues to expand its AWS infrastructure at massive scale. Google is investing heavily in its own AI infrastructure. Meta announced plans to spend tens of billions of dollars on AI-related capital expenditures. This level of spending is unprecedented in the history of the technology industry. Even during the peak of the dot-com boom, infrastructure spending was significantly smaller. Because artificial intelligence is not just software. It is physical. It requires energy. It requires hardware. It requires capital. And most importantly, it requires time. Time to build. Time to scale. Time to generate returns. But markets do not always wait for reality. Markets move based on expectations. And expectations have reached extraordinary levels. Investors believe artificial intelligence will transform every industry. They believe it will increase productivity, reduce costs, and create entirely new markets. Some estimates suggest AI could contribute trillions of dollars to the global economy over the coming decades. These expectations are driving massive investment, but they're also creating risk. Because when companies spend billions based on future expectations, those expectations must eventually be justified. If they are, the investment pays off. If they are not, the consequences can be severe. And history shows that technological revolutions often involve both outcomes. Some companies become dominant. Others disappear. Some investors become wealthy. Others lose everything. At this stage, it is still unclear which companies will ultimately win the AI race. But one thing is certain. The scale of investment is enormous. The expectations are massive. And the pressure to succeed is growing every day. Because in artificial intelligence, there may be room for only a few winners. And nobody wants to be left behind. To understand whether artificial intelligence is truly sustainable, we need to follow the money. Because behind every breakthrough, every demo, every headline, there is a simple question that ultimately determines survival. who is actually making money? And the answer is far more complicated than most people realize. Artificial intelligence is not like traditional software. In traditional software, once you build the product, distributing it to millions of users costs almost nothing. The marginal cost approaches zero. This is why companies like Microsoft and Google became so profitable. They could build software once and sell it infinitely. But artificial intelligence works differently. Every time someone uses an advanced AI model, it consumes real resources. Electricity, hardware, memory, compute cycles, physical infrastructure. Every prompt has a cost. Every response has a cost. Every user increases operational expenses. This fundamentally changes the economics. Because scaling AI does not reduce costs the same way traditional software does. In fact, scaling AI often increases costs dramatically. Training a large AI model can cost tens or hundreds of millions of dollars. But training is only the beginning. Once the model is deployed, it must run continuously. It must respond to users instantly. It must remain available 24 hours a day, across multiple continents. This requires enormous infrastructure. And infrastructure costs money every second it operates. Estimates suggest that running large-scale AI services can cost hundreds of millions or even billions of dollars per year in compute costs alone. This creates a critical challenge. Revenue must eventually exceed infrastructure costs. Otherwise, the system becomes economically unsustainable. This is where companies like Microsoft, Amazon, and Google play a crucial role. Because they don't just build AI. They sell the infrastructure that powers AI. Cloud computing has become the economic backbone of artificial intelligence. Instead of companies building their own data centers, they rent computing power from cloud providers. This allows startups and corporations to access massive computational resources without building physical infrastructure themselves. But it also means cloud providers profit regardless of which AI company wins. Whether a startup succeeds or fails, the cloud provider still gets paid. This makes cloud companies one of the safest beneficiaries of the AI boom. Amazon Web Services, Microsoft Azure, and Google Cloud have all seen massive increases in demand driven by artificial intelligence workloads. Microsoft, in particular, positioned itself strategically by partnering with OpenAI. Microsoft invested over $13 billion into OpenAI. But this investment wasn't just about owning part of the company. It was about integrating OpenAI into Microsoft's ecosystem. OpenAI runs primarily on Microsoft Azure infrastructure. This means every time someone uses OpenAI's models, Microsoft benefits through its cloud business. Microsoft integrated AI into its Office products, into its search engine, into its developer tools, into its enterprise services. Artificial intelligence became deeply embedded into Microsoft's entire business model. This transformed Microsoft from a traditional software company into one of the central infrastructure providers of the AI economy. And Microsoft is not alone. Amazon is doing the same with AWS. Google is doing the same with its cloud platform. Meta is investing heavily into infrastructure to support its own AI ecosystem. But there is an important distinction here. Infrastructure companies are making money today. Many AI model developers are not. Building AI models is expensive. Running them is expensive. Improving them is expensive. And monetizing them effectively is still an evolving challenge. Some companies charge subscriptions. Others sell enterprise access. Others integrate AI into existing products to increase value. But the long-term profitability of many AI systems remains uncertain. This creates a familiar pattern. During the early internet era, infrastructure companies also benefited first. Companies that built networking equipment, fiber optic cables, and server infrastructure experienced massive demand. But many internet startups that relied on that infrastructure failed. Not because the technology was useless, but because their business models were not sustainable. The same risk exists today. Just because AI is valuable does not mean every AI company will be profitable. And just because demand exists does not mean it will justify unlimited spending. This brings us to one of the most important forces driving the AI boom: competition. Competition between companies is driving spending to extreme levels. No company wants to fall behind. Because falling behind in AI could mean losing relevance entirely. Technology history is filled with examples of dominant companies losing their position because they failed to adapt. Companies that dominated previous eras disappeared when new technologies emerged. This creates fear. Fear of being replaced. Fear of becoming obsolete. Fear of missing the next major platform shift. This fear drives investment. It drives aggressive expansion. And sometimes it drives overinvestment. Because when companies invest based on fear rather than economics, they may spend more than the opportunity can justify. This has happened before. During the dot-com boom, companies invested massive amounts of money into internet infrastructure. Fiber optic networks were built across entire continents. Companies assumed internet traffic would grow indefinitely. And they were right. Internet traffic did grow, but not fast enough to justify the level of investment at the time. Many infrastructure companies went bankrupt, even though the technology itself eventually became essential. Timing mattered, economics mattered, and reality eventually caught up with expectations. Today, artificial intelligence may be following a similar path. Infrastructure spending is growing faster than proven profits. Companies are investing based on expected future demand, not current economic reality. This creates vulnerability, because if revenue growth slows, or adoption takes longer than expected, or profitability takes longer to achieve, markets can react negatively. Stock prices are based on future expectations, and expectations can change quickly. This doesn't mean artificial intelligence will fail. It means financial markets may experience volatility as reality and expectations adjust. This distinction is critical. Technology success does not guarantee investor success. A company can change the world and still lose money. A company can build revolutionary technology and still fail financially. History proves this repeatedly. And artificial intelligence is not immune to these economic laws. In fact, its massive infrastructure requirements may make it even more vulnerable to financial cycles. Because the larger the investment, the greater the expectations. And the greater the expectations, the greater the potential disappointment if reality falls short. Right now, artificial intelligence is supported by extraordinary levels of capital. Billions of dollars from corporations, billions from venture capital, billions from public markets. This capital is fueling rapid expansion, but it is also creating pressure. Pressure to justify valuations, pressure to generate returns. Pressure to prove that artificial intelligence is not just powerful, but profitable. And that is where uncertainty begins to emerge. Because while artificial intelligence has demonstrated extraordinary capabilities, its long-term economic structure is still evolving. Nobody knows exactly how profitable it will become. Nobody knows which companies will dominate. Nobody knows how long it will take for investments to generate returns. And markets do not like uncertainty. Markets tolerate uncertainty when optimism is high, but optimism can change. And when it does, markets can correct rapidly, not because the technology failed, but because expectations changed. And right now, expectations surrounding artificial intelligence are among the highest we have ever seen, which raises a critical question. What happens if reality grows slower than belief? And this is where things start to become uncomfortable. Because behind the headlines, behind the excitement, behind the billions being invested, there is a question nobody can ignore forever. What happens if the profits don't arrive fast enough? History has shown us that even the most powerful technologies can create massive financial bubbles. Not because the technology failed, but because expectations moved faster than reality. And right now, artificial intelligence may be walking that exact line. Before you go, I want to leave you with one final thought. Technology will always evolve. New opportunities will always appear. And every generation believes they are witnessing something unprecedented. But the people who succeed long-term are not the ones who follow hype blindly. They are the ones who stay calm, who stay informed, and who understand the difference between belief and reality. Artificial intelligence may become the most powerful technology of our lifetime. But understanding it clearly, without emotion, without hype, and without fear is what truly matters. Because in the end, knowledge is always the greatest advantage. If you've made it this far, you already understand something most people don't. And what happens next may determine whether this becomes the greatest technological revolution in modern history, or the next major financial correction. If you found this video valuable and you want to understand the future of technology, markets, and what's really happening behind the scenes, make sure to subscribe to the channel. This is just the beginning. My name is Miss Rena, and I'll see you in the next video.